This video we are in economics grade 12 and we are looking at the topic of the circular flow, and what we are going to do is we are going to cover it in full, starting with the participants in the circular flow, the real and money flow, the public goods, the injections and the withdrawal, also known as leakages. We are also going to look at the markets, and we are then going to do an exam question that will show us how this topic is tested in your examination, especially the term 1 tests, also known as the March test. So make sure that you have your notebook, you are ready to take some notes, so that you can take notes first, and then in the end we will then look at those question papers to see how to apply what you have taken in your notes into a real question paper. So the circular flow is our topic, and that's what we are going to start with. We are going to start with a closed circular flow, and we are going to look at how it looks like. So you see there that we have 4 participants. We have households, businesses, factor markets, and product markets. So really it's 2 participants and 2 markets. So the first participant being the household. So when it comes to the household, we know that we are talking about the consumers. We are going to talk in full about them, but just know that with households we're particularly talking about the consumers, the ones that buy, but also the ones that sell factors of production, because they are also our workers. So you will see there with that arrow that shows the goods, it shows goods moving from product markets going to them, because these people are our consumers. So they use their money to buy goods from product markets, or also known as goods market, and they consume those goods. So goods flow from the product market to them, and then they also sell their resources to factor markets. By resources we mean their factors of production. So if you know your factors of production, which we are going to look into it at a later stage, those are all the factors that the households they own, because they are the ones that can sell them to the factor market. They sell them to the factor market, who then sells them to the businesses as inputs. So this factors, they move from factor markets to businesses, which meaning businesses are the ones who will employ household and then pay them an income, which that income they will then use to buy consumers. You see how it goes back. So those factors of production that are coming from the factor market, we call them the inputs, because they are an input into a business. We are inputting them into our production process, because businesses are the ones who will now produce goods that will go to the product market. So you see now the goods are moving from the businesses to product markets. When they get to the product market, they will then be sold to household, and you see it's a full complete circle. So when you are explaining these participants, it's easier when you're explaining them as in relation to each other, because then you never run out of points. The other participant that is most important, we find it at the center, and that becomes the state. By the state we are talking about the government. The government has things that it's giving to the household and things that the household is giving to the government. So for example, the government gives public goods, what we call public goods, to the government. We are talking about things like the free healthcare, free education. Those are public goods that are going to the households. To the businesses, they are giving things like subsidies, meaning grants to help them with their production cost. And then both the businesses and the households, what they give in turn to the government is the taxes. So businesses pay business or company tax, household pay personal income tax to the government. So when you are given, for example, a question or an essay in particular, and you are asked to describe your participants, the first participant, you're going to say you have households. And what are you going to say about households? I always say to my students that when you are dealing with an essay in particular, make sure that you at least have 5 points that you can give. So my first point there is that they buy goods and services from product markets. They own and sell factors of production to them factor markets. They then receive remuneration in a form of wages, interest, and rent and profit, and then they pay taxes to the state and the government, and also receive public goods from the state. So you have to make sure that when you're talking about a household, you are describing how they relate to every other participant. That makes it easier for you to be able to describe the participant of a household. We are going to do the same thing for businesses. So you will see that when we describe businesses, we are going to describe how it relates to factor markets, to household, to the state, and to the product market. So we say the businesses are also known as the firms. They buy factors of production from households in the factor market. They use the factors of production to produce goods and services. They then sell the goods and services to the households in the product market, which are also known as the goods market. And then they pay taxes to the government and they receive subsidies from the government. If you're not aware of what subsidies are, there are these grants that government gives to businesses to help reduce the cost of production or to make their production to be more green, meaning more sustainable to the environment. So sometimes when we are looking into things like the environment, for the businesses to not be wasteful, it would cost them a lot more than they are making. So the government will then come in and help them with what we call subsidies to help them with their production process. We then now are going to move into describing now the role of the state or the role of the government. Again, we are going to still relate it to all the other participants. So when we are talking about the state, we're talking about the government. We are also talking, it's the same thing as the public sector. I know that public sector also stands as a topic which we are going to do in the next coming videos, so be in the lookout for that. Make sure that your notifications are turned on for that. And while we are still here, might I also add, make sure that you subscribe so that you will be notified when we post the topic of public sector. So anyway, the public sector, what does the public sector do? They provide public goods such as education, health, housing to households. They provide subsidies to businesses. Those are those subsidies we said they help them reduce their costs. And then they also collect taxes from households and businesses. These taxes they then use is what they use to be able to provide the public goods and the subsidies. So basically it's a circle, hence we are dealing with a circular flow. Now when you're looking at our circular flow, that was a closed market circular flow, meaning we are just now moving in the country. But now when you start involving other economies of other countries, that's where we now have the foreign sector, which becomes the fourth participant in our circular flow. So we are going to now discuss the role of the foreign sector. So foreign sector, we are talking about foreign countries that we are trading with in terms of imports and exports. So they help us because they buy from us, but then we also help them by buying from them. So how do we describe our foreign sector? We say there is a flow of goods and services from the foreign sector, which is other foreign countries, to our product market. So when they get into the country, they get into the goods market or the product market, and because they are coming from other countries to our country, we call them imports. So we call them in a form of imports. And then there is a flow of goods and services from the product market to the foreign sector as exports, and then the imports are an expenditure and the exports are an income in the economy of our country. So we make money from exports, but we spend on imports. Then we are going to now discuss what is the difference between what we call a real flow and a money flow. So when we are talking about a real flow, we are talking about a flow of goods and services. So this would be the lines that are in red. So you will see in that one that the arrow is pointing as it's the flow of resources, meaning the factors of production from households going to the factor markets. In inputs, it's the same factors of production moving from factor markets to businesses. And then we are also looking at money flow. Money flow is the flow of revenues that are moving from the product market going to the businesses. This is where households are now buying what they're going to consume, which means to the businesses this becomes revenue, it becomes an income. We also have a cost that you will see moving from businesses to the factor market. That cost is the wages that we are paying to the household. So we are going to describe it proper in full as we are describing what is real flow. So real flow, we have, it's the flow basically of factors of production and also of goods and services. So let's start with our factors of production. Factors of production flow from households to businesses through the factor market. Goods and services flow from businesses to households through the product market. Factors of production and goods and services flow from foreign countries to ours as imports, and then the same factors of production and goods and services flow from our country to other countries as exports. So basically, real flow, we are talking about the flow of everything else that is not money, meaning anything else that is a service in terms of factors of production, meaning this is the workers that are now going to work in our businesses or going to work in foreign countries, and the goods that are going to the households and coming into the country as imports. So when we now look at the money flow, we are talking about the flow of all things money, whether in terms of an income or in terms of a cost. So we are going to start with businesses. Businesses pay remuneration for factors of production with wages, interests, and profit. So basically, we are saying that businesses, as much as they receive factors of productions from households, they need to pay for them. This becomes a cost to the business, and it is money that they are paying to the household in terms of wages and profits. And then we have households receive remuneration as an income from businesses, so this becomes their salaries and their wages that they can now use for consumption. And then households use their income to buy goods and services from businesses in the product market, so they will go and spend the money that they have earned. And then businesses and households pay taxes to the government. That is still a flow of money because taxes are still money. With the addition of those taxes that we just talked about and the imports and exports in the foreign sector, you can see the real flow and the money flow in full in our diagram there. And so we are going to discuss now the division of money flow and real flow into injections and withdrawals, also known as leakages. So all of those real flows and money flows, they can be divided into injections and withdrawals. Our injections are investments, government spending, and exports, whereas our withdrawals are savings and taxes, and all, as well as imports. Now, when we go back to injections, this investment, who makes investments, is businesses who make investments. They invest into the financial sector, which we are going to discuss at a later stage. So businesses make investments. It's the government that does the spending. What do they spend? They spend the public goods, and then as well as the exports. We are saying they're injections because all these three things, they bring money into our economy. Hence, we are saying they're injecting money into our economy. Withdrawals, it's in the name. They are going to withdraw money from the economy. So, for example, households, when they receive their money and they decide to save it, that withdraws money from the circular flow. It means that that money is no longer circulating because that person decided, instead of using their money to buy goods and services, they decided to save it. So that means that it's not doing anything. It's not even earning an interest in most times. So they're just saving it. And then taxes as well. Taxes are it's money that is being taken from businesses and households that they could have used to circulate in the economy. And then exports is money leaving us literally to pay for expenditure from foreign countries. We then have to now also discuss, you will notice that we discussed everything else, but we did not discuss factor market and product market. It's because they're not necessarily participants, but rather they are markets. So to discuss factor market and product market, we then have to get into the discussion of markets. So what is a product market? A product market is also known as the good market, where consumer goods and services are being exchanged, buying and selling goods and services produced in the market. So basically, we are talking about a market where you will find goods and services being exchanged for money between participants in the circular flow or in the economy. And what is the factor market? The factor market is where factors of production are being traded. Traded meaning you are giving something for something. So we give them our services as employees, and they give us wages as a trade or as an exchange. Natural resources, labor, capital, and entrepreneurship are traded in this market. So those are some of the types of the factors of production. We are talking about natural resources, labor, capital, and entrepreneurship. This is, if you remember well, if you're still remembering your grade 9 education well, you did factors of production and their remuneration. Hence, when we are talking about their remuneration, you will see we mention wages, we mention profit and interest, is because those things are what you get for these factors of production. But then those are not the only markets that we have. We also have our foreign sector, which gives us the foreign market. And then we also have the financial market, which is where those businesses, remember we said the investments are being invested in financial sector. That means our banks and our financial institutions. So the financial sector is divided into the money market and the capital market. The money market is where short-term loans and funds are being borrowed and saved. So remember when we were discussing withdrawals, we said that the first withdrawal is savings. Where do we save? We save in a bank, and savings are usually a short-term fund. So those savings are done in the money markets because you are doing things for short term. And whereas when you are now looking for long-term loans like mortgages or the type of loans that businesses loan, we are now looking at the capital markets. So that's why it says the capital markets are for long-term loans and for long-term funds such as investments. So if a business has some money that it wants to invest, it will invest it in the financial market. And then we also have the foreign exchange markets. So the first thing that happens in the foreign exchange market is that businesses have to buy foreign currency. Why do they have to buy foreign currency? Is because when you're wanting to import goods into the country, let's say you're trying to buy coffee beans from Rwanda, for example, you would now have to buy them from a business in Rwanda. A business in Rwanda uses the currency in Rwanda. So that means you will have to take your rands, your South African rands, and change them to the currency in Rwanda for you to be able to buy those coffee beans and export them into the country. And then so we also say imports and exports are traded in these markets. To trade those imports and exports, you have to now exchange currencies. Now look at a question from a March test question paper. A question of circular flow, you will find it under macroeconomics, and you will see in 3.1.1 it says name two flows in an open circular flow economy. So two flows, we know that we have discussed the real flow and a money flow. So when they say name two flows, those are the only two flows that we have, real flow and the money flow. And then in the next question they're saying 3.1.2, why is it not possible to exclude individuals from using public goods? Remember we discussed public goods. We're talking about free healthcare and public education, for example. How can you not exclude an individual from something that is free and to the public? It's because they are accessible to everyone. That's the first reason. The second reason, it is impossible to prevent one individual, to single out one person and say everybody else can enjoy the free goods that are for the public except for this person. So people get to enjoy those goods as a public, hence they are public goods, meaning they are released to the public. So it's very hard to prevent just one person from receiving something that is for everyone. And then 3.2.1 says identify the participants that own the factors of production. We said that those are households / consumers. They are the ones who go and work to the businesses, or they sell their factors of production to the factor markets. The second question, 3.2.2, says name one public good provided by the state. We have been mentioning these public goods as we are coming along. We talked about free healthcare, we talked about public education, we also talked about free housing, RDPs. So they just wanted one. You can select any one of those. I said there, education or housing. Can also be free healthcare if you want. And then in 3.2.3 it says briefly describe the term factor market, meaning what does factor market mean? So basically, you know that a factor market is a market where we trade factors of production. So you can keep your description as simple as that: a market where factors of production are sold and bought, or you can say a market where factors of production are being traded. They are sold by the household, they are bought by the businesses for production. So you don't even have to go that further because it's only 2 marks. So long as you said a market where factors of production are traded. And then in 3.2.4 it says, what is the effect on national income if injections are less than withdrawals? Remember, the injections are the incomes, the withdrawals are the expenses. This means national income will decrease because it means we have less income and higher expenses, meaning there's no money, there's not enough money circulating in our economy, and we don't even have enough income. 3.2.5 says, explain the impact of a decrease in taxes on the level of production. So what happens if businesses do not have to pay as much tax as they're paying? It means that households' income will increase, which will result in increase in demand. If businesses are not paying taxes, it means that they can pay their employees more, which are the households, and that means that households will now have enough money to spend, meaning they will increase their demand. So the level of production now in the businesses will then increase as a response to the demand that is made by this households. So it's, again, circular flow. Everything, you will notice that it becomes a cycle. What happens to the businesses affect the household, the reaction of the household will then come back and affect the businesses again. Hence it's a circular flow, meaning that the effect is in a cycle. Another type of question that you will have for a circular flow is an essay question in your section C of your question paper. You know, for your essay, the first thing that is important is the structure, the introduction, which is where you will define a term, the body, which you will list your subheadings, and your conclusions, where you will now give your opinion for 2 marks. So it can be a simple 2 lines. So let's look at our essay question. Our essay question is question 5. Again, circular flow falls under the macroeconomics. It says, discuss in detail the market within the 4-sector circular flow market. How can the increase in injection impact the South African economy? So our main part talks about the markets in the circular flow. You have to pay attention to that. They're not talking about participants, they're talking about their markets. So in the introduction, you have to define something. What are you going to define? Since they're talking about markets, the simplest thing to define there is the market. So a market is a mechanism that brings buyers and sellers together to exchange goods and services. Another thing that you can define in regards to that main part can be the circular flow. You can describe to us what a circular flow is. That will also still be a good introduction, so long as you have defined something. So now that we are done with your introduction, we now need to look at the subheadings. The subheadings, you are going to list the markets that you can find in a 4-sector market. By 4-sector, we mean for the market that has 4 participants, meaning households, businesses, the state, and the foreign sector. So what are going to be the markets if those are the participants? The first one, you're going to have the product or the goods market. I always say that you have to keep your mark allocation in mind. So for this particular question, these headings are going to have 1 mark each. So under each subheading, you will give 3 points each, because 1 point is worth 2 marks. So that means that you will get 6 marks. With the 1 mark of the subheading, you will get 7 marks for each subheading. So that means that when you have 4 subheadings, you are getting 7 times 4. So you should be able to cover that 26 marks without a problem if you stick to the 3 points each rule. So you're going to now list your markets. We have a product and goods market, you're going to give 3 points from what you have already taken in your notes, just as you have taken it in your notes under the product market. What is a product market? How does it connect the participants, and how does it connect as well to the other markets? What do we do in that market? Your first point could even just be defining what a product market is: a market where goods and services are exchanged. The same thing you are going to do with your factor markets, as well as with your financial markets and foreign exchange markets. Then the next part is going to be the additional part of your essay, which is the second bullet point, and it says, how can the increase in injections impact on the South African economy? So we are talking about injections. Remember, we said that the injections are the things that are an income to the economy. So we are talking about investments that businesses make, because investments earn an interest that circulates, and they can even pay more tax from it. We're talking about government spending. Government spending includes things like subsidies and giving, improving people's social development. And then we are also talking about exports. Exports is either countries buying goods from our country, so that gives us more business, and it gives us, our businesses in this country, more revenue, which means they can even pay more taxes, and we have even much more money circulating in the economy. So having those things increase, meaning the increase in investments, the increase in government spending, and the increase in exports, what does that do for our economy? So let's start with an increase in investment. It will help establish businesses, which will increase employment, because when businesses are doing well, it means production levels are going higher. That means we need more employees to work the production. It will also increase the tax revenue, because the more income businesses make, the higher the taxes they can pay, and then that leads us to the increase in government spending, which is our point number 3. And we say increase in government spending will help improve social development and infrastructure, because the government has more money to spend now. Then government subsidies will help reduce production cost, and then increase in exports may result in the appreciation of the value of rand. Remember, we said when you are buying into a country, you need their currency. The demand of a certain currency increases the value of that currency, so the value of that currency will then appreciate. So this then covers all of the possible questions that you can have with the circular flow. If you have any other questions, make sure you leave them in the comment section below. If you have YouTube recommend you more of my videos, be sure to click the like button and subscribe to the channel. And if you have any questions, leave them in the comment section below.